Thanks, Andrew. Thanks, everyone, for staying with us through to the end of the day, particularly as there wasn't a coffee break, so it was a long slog for everybody. The last session, we're going to tackle one of the most complex and pressing challenges in the industry, how to finance the next generation of FPSOs. So we're moving on to oil and gas and away from wind now. The industry is going through a challenging period at the moment, so everyone would have you believe. Well, I always think there is no other period other than a challenging period. I've been doing this 20 years now, and I don't know about anybody else, but I don't remember the period when we were all running around picking daisies and skipping between meetings while signing off on the next FPSO project. It was never that easy, so there's always challenges. But I guess what we can say is that there's a particular convergence of issues at the moment, and the challenges that we've got at the moment are different to what we've had in the past. So it's a new set of hurdles. Having said that, the generally held view is that probably securing finance in 2025 is probably more difficult than it has been for this particular sector. As we've heard and everybody's familiar with, traditional lenders have been reducing and scaling back their appetite and exposure to oil and gas, citing ESG mandates, a broader shift towards energy transition, concerns over time horizons for oil and gas, and potential for stranded asset issues and things like that, and a host of other pressures. So there are a lot of challenges. There's also potential competition from renewables deals, of course, as another source of capital, which is sometimes seen as an easier path and less like swimming against the tide. So there's also that. But having said that, set against that, there's a queue of new FPSO projects out there. The tenders keep on coming. And the cost of deploying capital in this sector is just going up, and the amount of capital needed is increasing and increasing. You know, any large-size FPSO project these days is going to be in excess of $2 billion, probably. It's not small change. You layer onto that the challenges of different contracting structures which are being put out there at the moment, which is, again, a new thing. And the challenges keep on coming, particularly for independent operators that are, or have been in the past, always reliant on long-term and secure bank financing. So this has led to the controversial question being posed by some: are we actually seeing the last generation of FPSOs being financed at the moment? I hope we all know the answer to that, but it's interesting that those questions are even being asked. And having said all that, you know, a reduced pool of players in the industry always results in opportunities for those that are left. So the ones that are still in there, or the new entrants coming in, there's a lot still to be done. And with FPSOs playing a critical role in terms of being able to exploit offshore oil and gas, particularly in deep water, the stronger players are just going to keep rolling on and on. So to address some of these points, we've got a great panel here, quite a large panel as well. So I'm going to let everybody introduce themselves rather than me honing on. Given that there's quite a few of you, if I could ask you to try and keep it to 2 minutes, if you can, gentlemen, that'd be great. Do you want to start with Joachim?
Hello. It works. My name is Joachim Skorge. I'm responsible for investment banking for DNB markets in Asia Pacific. I've been here in Singapore for a long time, since 2007. Before that, I worked in New York, and before that in Oslo. So I'm Norwegian myself. I've been focusing on investment banking across products, primarily focusing on maritime and energy. And what we have today with DNB Markets is a very strong franchise, I think, with offices throughout the world, focused on the same industries, and also being very active when it comes to the offshore industry. So I think since the beginning of 2024, we completed 29 transactions across M&A and capital markets for the offshore industry. So I think that just shows that it is possible to do transactions. It might be a little bit more challenging, and you might have to work a little bit harder, but there is money out there, but more work has to be done in terms of structuring.
Hi, good afternoon. My name is Kheng. I head up the transportation and offshore franchise at Standard Chartered, looking at anything that flies and anything that floats, including the offshore industry. Originally from Malaysia, so oil and gas is inevitably in my blood, and joining an organization where there's a core footprint in Southeast Asia and West Africa, the floating production business kind of ended up at my patch. And what an interesting ride it has been think dating back almost 1.5 decades ago, financing assets were just $100 million, and now we're, most recently with some of my esteemed clients here, where we are raising over $1 billion. So how the industry has changed, and we need to just continue to adapt to these changes. I'm looking forward to kind of discussing this today.
Yeah. Hi everyone, my name is Mathias Borge. I work for Euronext Oslo Børs. I started my career in Clarksons here in Singapore, actually on the offshore desk around the end of 2014. So I guess my timing is not the best. And then I ended up later in the Oslo Stock Exchange. I'm now responsible for the shipping and energy sectors at Euronext. As you all may know, we are the leading venue, equity listing venue and debt listing venue for offshore companies and also shipping companies. And yeah, looking forward to discuss these markets.
Thank you. Hi, good afternoon, everybody. I'm Desmond from Clifford Capital. I've been working here for about 5 years. So Clifford Capital is an infrastructure credit platform. We specialize in originating infrastructure debt and also distribution and investments with a policy mandate. So I'm from the client coverage group of Clifford Capital. I cover clients across the maritime and offshore energy sectors.
Thanks, I'm Andrew Pang. I head the corporate finance function in Asia for Yinson Production. And I'd like to use my 2 minutes, if I may, just to challenge. Firstly, you, Andrew, you're very negative in your introduction of this panel around, and I think you used the word challenging in terms of our ability to raise financing. You, Andrew, another Andrew, you're also using that challenging word. I challenge us as a panel over the next 30 minutes to hopefully put a positive spin on where we are today. I think there is a price for everything. And where we've seen a number of transactions happen over the last 12 months, there is signs of hope for the FPSO industry. It is not all doom and gloom. And I hope everyone pushes us towards that conclusion by the end of this session.
You've actually preempted some of the first question there, Andrew. And also, I very much like this challenging thing, because that brings me on to the first thing I was going to say. The ideal way that this panel goes today is if I don't have to say very much. Firstly, because it's the end of the day and I'm quite tired. But secondly, no one wants to listen to me. They're all here to listen to you guys, right? So the more that you can speak to each other and challenge each other and interject with each other's opinions, and I don't have to step in and ask more questions, the better. And to try and encourage that, I'm actually going to set a challenge, which, Kevin, I need your help with as well. Every time somebody interjects either in support of something that someone else has said on the panel, or ideally challenging it and against it, you will score a point. And if you say something controversial, or if you contradict something that someone else has said, you'll get 2 points. Kevin, can you be in charge of scoring, please? And at the end, we will see which panelist was the most outspoken in their views. There's no prize, I should add, other than the adulation and, and respect of your peers in the room. So we'll leave that challenge as it is. So turning to the first question, big picture issue first. We keep hearing, as Andrew said, about this shortage of capital and how it's all disaster and how it's all doom and gloom, and there's a big funding gap and we're never going to fill it, and how's it all going to work? But is there actually really a funding gap, is the first question. Or is the money available as long as you approach the project in the right way, and that there is no actual problem with a funding gap, it's just a case of approach? Shall I start with you, Andrew, since you were so positive?
Yeah, I think my view is that we've been so preoccupied as an industry of finding that cheapest dollar, whether that was ECA funding 10 years ago or even commercial bank lending more recently. And we've kind of lost the bigger picture that actually there is now a vast array of different pools of capital out there, whether that's private or public. It could be the Nordic market, it could be private credit that seems to be growing like a weed all over the world, particularly in Asia Pacific. And yes, they do have different return thresholds. That is a fact of life. You won't be able to get the same pricing. But if you can wrap your mind around the idea that maybe capital for the offshore oil and gas sector has repriced, if you can get your contracts and pass that price increase to the clients, to the charterers, then there is still a solid business model underpinning all of this. So firstly, you need to have contracts that are financeable, and we can get into that piece separately. Then you need to get into the mindset that you may have to pay a little bit more to finance those contracts. But if you do that, I think we've seen a number of transactions happen. So BW recently announced the sale of their vessel, which obviously is very generating a lot of equity for them to reinvest. We saw Altera sell their vessel to Karoon Energy, again for another $100 million, $110 million. And you know, Yinson's done a decent job of raising capital as well. So the evidence is out there. Hopefully, management now gets the picture that yes, financing is available, not in our traditional markets, but in non-traditional markets. We're going to have to adapt as an organization to access those markets. And when we do, then we'll see, because underpinning everything, as I think you said right at the start, there are tenders out there. Clients need FPSOs. Clients have fields that need to be monetized. That is not going to go away anytime soon. So provided we can unlock this financing, there is business to be done.
Yeah, I agree with you, Andrew. So I think what I have observed in the market is that top quality sponsors, you know, like Yinson, BW Offshore, I don't think you guys have a problem raising financing from the bank market. And I mean, even for Yinson, we know that you guys have also tapped the project bond market, and also there could be institutional funds that are also financing your projects. So I think the challenge is actually more for the smaller players who might, you know, have difficulty raising financing, and then maybe or projects that has got a higher risk profile. So I think at the end of the day, it's a question of how much, you know, how much the financing costs. So I think owners, smaller owners, or projects with high risk profile, they just have to be a little bit more creative with tapping various pools of capital. And then I think that's where Clifford Capital, we see an opportunity for us to play a role. So maybe later on, I can share a little bit more on, you know, the kind of financing, the multiple sources of capital that we can tap on to put together to finance projects.
I think I can support that as well. So it's, I guess, only supporters for now. Hopefully some detractors on the other side. At least in the equity markets, I think probably I would say it's the last 2 years has been actually quite strong, contrary to popular belief that that's very difficult. But everything is relative, right? So the equity markets in general, the public equity markets in general, have been quite weak all over the world. But at least in the Nordics, the oil services offshore has been sort of the bright spot, I would say, and probably on the, even more so on the debt side. So the question is, can you bring, you know, 20, 30 companies to the market? Probably not, but if you have the right name and sort of the right projects and the right contract coverage, then I would think so. And then, you know, the markets go up and down every week now, so, and move sideways. And but I think the opportunity is there more than people think, but with the right name behind it, probably.
I think to Andrew's point, proof is in the pudding. I think they've been really active in the market, and we as an organization are trying to be constructive. I think when we talk about negativity, we're looking at it from a vacuum perspective. At the end of the day, we view this as an infrastructure project. And there is advent of substantial amount of capital, both in the private and public spaces, that can support that. We have announced a partnership with Apollo to kind of co-invest in the infrastructure sector. And we firmly believe the offshore FPSO belongs in the offshore infrastructure sector. It has the characteristics of a fixed yield infrastructure asset, a unique kind of business model that funds a requirement that the world needs for at least the next 20, 30 years. So for us, we want to look just beyond providing kind of senior debt. We want to look at how we can be constructive across the capital structure, whether it be it MES or finding partnerships that we can kind of bring liquidity to the table. It is at the price, of course, but we do believe that the industry is at part of the market that hopefully should be able to absorb some of that cost of capital.
Yeah. Well, I'll come back to you a second to give you your shot on that. Just while you mentioned infra funds, it's quite an interesting point. I was going to come on to it later, but let's do it now since you mentioned it. It's certainly a pattern that we've seen and a current trend in that there's a lot of interest from infra funds in this sector now. And it's in some ways a surprise there hasn't been previously, but it's certainly a current trend that we're seeing. Is that something that others are seeing, Andrew? Have you seen appetite from infra funds coming into the sector?
Absolutely. I think they take a broader view than the lenders, in that they don't necessarily have activists in their lobby. badgering their CEOs. So there's a little bit more pragmatism. They really appreciate long-term contracts, in my view. So the trend towards, perhaps that we're seeing towards BOT or EPC, may be some cause for concern, but where you have a long-term contract with a strong investment grade or NOC counterpart, that is always going to be attractive to that type of capital, where they want to park it and they want to collect a nice dividend yield for many, many years to come. We were successful in raising some capital from infrastructure funds. I don't think that is going away anytime soon. And when you look at how their fundraising is going, there is a lot of money waiting to be deployed. And when they compare offshore oil and gas to any other infrastructure sector, I think you're getting top-class off-takers, very high credit ratings. You're getting a yield pickup because a lot of other investors have declined to put their money in. And you're getting world-class operations. Like I think, it doesn't necessarily have to be the big guys, but even people like Samos Energy raised their $75 million bond last year, and that was very well received, listed in the Nordic market, of course, but behind that, it's infrastructure funds putting the money in. So definitely see there's room for them to play.
Yeah, we're also seeing a kind of widening of what the net that they can, and the field that they can play in as well. We're seeing infra funds even coming into some of the offshore vessel space as well as FPSOs. So things like cable laying vessels and things like that are being done in some cases by infra funds that traditionally wouldn't have done that. So it does seem to be a broadening of the sphere there. Sorry, Joachim, we'll come back to you on the funding gap question, and also if you've got anything to add on the infra fund point.
No, I think it's a very interesting discussion. I think on one hand, it is true that some commercial banks have been pulling back from the sector, mostly due to ESG concerns and pressure from various stakeholders. From DNB's point of view, we never pull out of the sector. We are doing a lot more renewables than we used to do, but our strategy is to also stay committed to oil and gas, because we think oil and gas will play an important role for the foreseeable future. So we never sort of pulled out of that market. But if you look at a lot of our activity towards the sector at the moment, it's actually related to capital markets and also finding alternative capital providers. And I think the beauty with FPSO projects is that if you structure it right, you have access to infra capital, which is very competitively priced money. And I think also, if you look at both Yinson and also BW Offshore, they've been active in the Nordic bond market. BW Offshore has been a frequent issuer, working with DNB. And also we had the honor of being lead left on Yinson's 500 plus $100 million high yield bond last year in the Nordic market, which is a spectacular transaction, very well received in the market. It was a first in many ways. It was a first because it was an Asian issuer, not a known name in the Nordic market. It was a very large amount also. And it was massively oversubscribed. It was a good structure, has traded very well in the aftermarket. And I think definitely there's more demand for those type of deals.
I want to call back to the earlier session with Charles and Martin. We were talking about, to your point, Joachim, we were talking about the banks who are now leaving the net zero alliance, and does that mean we're going to see more banks coming back into financing the oil and gas space? And I think their conclusion was probably not. But what we are going to see is a slowdown in people leaving the space. So what's important now is we preserve the existing limits that we have, and we return capital to the banks so that they can continue to fund our next vessel. So exactly, that's the bond that you mentioned. The purpose of that bond was returning capital to our commercial lenders. That doesn't necessarily optimize the cost of funding. It doesn't extend the maturity or do anything like that. But it does restore capital to our lenders so that they can fund our or our peers' next vessels, right? The more that we can return capital to these guys, and for guys like Clifford Capital, I guess you play in both sides. So whether it's public or private, you're going to be there as an infrastructure investor.
Yeah, so just to add on to Andrew's point about recycling capital, so I think I wanted to share that, Clifford Capital, we have established an infrastructure asset-backed securities program since 2018. To date, we have already raised up to about 2.7 billion from the market, and these funds are from institutional investors. So what happened is, in all these IABS, we call it in short, basically we bundle together infrastructure loans comprising assets across oil and gas, as well as low carbon and green energy sectors. I think it's up to about a quarter of each issuance will comprise oil and gas assets. So, we actually started this market because we wanted to mobilize institutional capital who are interested in Asian infrastructure assets. And by doing so, so we help banks to recycle capital, including our Clifford Capital's balance sheet. So I think this is a successful program so far. I think we just closed our latest 6 issuance last week. That issuance was about 500 million.
Great, thanks. Yeah, just coming back to the Nordic bond point, that's another clear trend we've been seeing, a number of deals in the last 6-12 months. The window is clearly open at the moment. Do you see that continuing for the foreseeable future? Is it getting more difficult, or do you think that'll be continuing for the year ahead?
No, the market is still very much open, and just over the last few weeks we had a number of very successful transactions also related to oil and gas. So I think the market is open for now. Of course, we live in a world that is a little bit more, how should I say it, it's a little more muddy in terms of the outlook when it comes to the general financial markets and the overall economy. So, I mean, potentially that could have an impact at some point in time, but what we've seen so far is that the impact on the equity market has been a lot more severe compared to what we've seen for the bond market.
Would you agree with that, Mathias?
Would agree with that, actually. So I don't think I would add anything to that.
Maybe if I can ask a question. I would love to hear your thoughts on this juxtaposing, given this is Singapore Maritime Week. And we were all sitting here discussing the merits of how do you evaluate a transaction for FPSO, an offshore infrastructure project, right? And clearly there are parameters that might not fit every investor's segment. And looking at the pool of liquidity that typically goes into shipping, where you regardless of who is the counterparty, you know that you have a conventional asset that you can sell, right? I don't think that applies very much again today, where now when you wake up, there might be tariffs imposed on Chinese-built asset, Chinese-owned asset. If you buy oil from Venezuela, you might get tariffed counterparties. Operating a global business is now becoming increasingly complex, where else I think the parameters for an infrastructure project, I think still relatively clear. There is heightened risk, but the parameters still remains relatively intact and manageable. I mean, banks are in the market of pricing risk, and I'm constantly thinking, the struggle we have, or at least the challenge we are looking is, how do we then price this risk in an ever-evolving, fast-changing market where there's a lot of uncertainty, and how do you guys see that from your investor base, especially in Norway, where you guys look both in the offshore and in the shipping markets?
Well, it's a very complex question, and I think there's a lot of uncertainty related to shipping in particular now, and how these potential or the trade wars, how they will play out, what will be the impact, who will be affected, what kind of length are we looking at, what will happen with the port charges in the US, etc. So I think all these things have potential severe impact. I do think if you look at shipping compared to offshore, I think decision making is certainly slowed down in the shipping industry at the moment. I think when it comes to offshore, which is more focused on, and FPSOs in particular, which is more focused on long-term products or projects, my impression is it's a little more business as usual. So I think that business is moving forward, with little interruption for now. We have to see how this whole thing is impacting the overall world economy and the financial markets. But I think there's a lot more uncertainty among investors and also industry participants related to transportation shipping compared to offshore. That's mine.
I think if you look at the shipping space, this sort of, call it tariff questions that we have now that change, frequently every day. To some extent, shipping's been dealing with that for 3 years, given the war in Russia, right? And I think that they adapt to it well, and I think it takes some time to find out sort of where things will land. But typically, they tend to adapt to it, and I think that will happen in this case as well. And then in the short term, you will get a lot of volatility, probably IPO windows and opportunities to raise debt or equity will close and open at a quicker pace, probably. But in the end, this might also, for European markets, could be a positive thing as well.
I just to comment on that, I totally agree. So I think actually for some shipping segments, volatility might be positive in terms of earnings at least. But I think now we're at the level where the uncertainty is so high that I think decision making for very big decisions will be postponed at least for a couple of weeks, and then we have to see what happens.
Trading liquidity, though. Yeah,
exactly.
No, it's an interesting point of view, Chaos. I would have said historically, probably people would have viewed the oil and gas project space as more risky than shipping, whereas, yeah, maybe things are going to do a bit of an about turn. People used to look at, something like an FPSO project in Angola and be frightened off by jurisdiction risk, whereas now you can look at that and say, actually, we know what the risk is, we can manage it, we can mitigate it, we know what the parameters are, whereas for shipping with globally trading assets, you never know, what's going to come in from left field. So it'll be interesting to see how that plays out in terms of risk analysis. Moving on to the equity markets, Mathias, maybe you can kick us off on that. With oil prices taking a tumble and volatility kind of returning to most of the indices, and Trump doing his thing, you can't afford to, you can't escape from mentioning him as much as you try. How are things looking? How are things looking there? And if you were an owner looking to be raising money, would you be considering equity raises or IPOs at this point, or are we beyond that point now and we've gone over the tipping point?
I mean, I think we kind of discussed it a bit earlier, but this is sort of a thing you can't control, right? Sort of what is Trump going to do tomorrow, and how is it going to affect our market, or whether it's in Europe or in Asia or in the US, it's impossible. But I think there's generally, for the right price, which Andrew mentioned earlier, which is, I guess the final question. In any case, you can list companies, right? We had a pretty good activity level last year and prior, relatively speaking, to the rest of the market. It was the only bright spot, I would say, oil services offshore. Is it difficult? Yes. Is it the right price? Probably a mature company with strong backers that can return capital to investors. If you're a small, unknown company and you're investing for growth the next 10 years, probably it's quite difficult, but possible, certainly. But
my advice would be to not launch an IPO tomorrow, but given the market conditions. But could there be windows later this year? For sure. Last year was pretty good, and also preparing for an IPO takes a fair bit of time. So I think the trick is to start preparing early and then be ready when the window is there.
I think the key focus for me in this space is actually there should be an emphasis on de-risking. So whether that's an IPO or whether you're thinking about a bond issuance and maybe your concerns are that interest rates are a little bit high, there's too much volatility. If you have a business that's backed by long-term contracts and you're trying to attract infrastructure-like capital, what they're looking for is not that final 5 bips of value. What they're looking for is the stability of your ability to dividend. Or to pay interest on that capital. So if you see that the markets are open, and maybe today is not the right time, but maybe it's tomorrow, certainly for the bond markets, I think there's a lot of investor appetite right now. Even if you're going to have to pay a slightly higher base rate, or you're paying a little bit more of a premium over treasuries, I think it's worth it locking in that long-term capital and giving stability to your P&L and cash flow actually is much more incremental for your stakeholders than trying to optimize that last 5 basis points.
Yeah.
If I can add something, I think we're all sitting here talking about, volatility like it's a new thing in the oil and gas sector, It's not like it's been up and to the right for 15 years like the S&P 500. And it's also not going sideways and paying a 5% dividend yield like a REIT in Singapore. So I think actually this volatility that everybody's talking about because of Trump, it's actually a bit unfair because I think it's been there all the whole time, right? Because of the underlying business is very linked to geopolitics and things that are happening in the world. So I think a lot of the listed companies in here and gentlemen on the stage would probably recognize that it's not a new thing in that sense, but.
I think there's a difference also between private markets and public markets. So I think I would be more careful with starting an IPO process right now, as I mentioned. When it comes to raising private capital, and especially if it's against long-term contracts and the investment is more infra-like, I think the timing now is still okay. So it really depends on what kind of proposition you have to investors and also what kind of capital you're targeting.
Yeah. And I think we may have set a new record on panels of this type of not mentioning bank debt yet. So I'm sure KS has probably got something he'd like to say to us about the fact that not all banks are withdrawing from the sector and that some of them are still quite active. I
don't want to go into bank debt now. Just look, I think if you look at bank debt, bank operates very differently from public markets. We are a function of the regulations that have imposed, and we can't talk about bank debt interest without talking about Basel. I don't want to kind of close out on Basel III conversation, but the long and short for it is that banks will have to allocate more capital as in 2026, 2027, as this regulation changes. So how do we react to this, right? You'll see that there is a trend across banks where in the past, a lot of banks had specialization. We had one guy looking at aviation, one guy looking at shipping, one guy looking at offshore sector. Those teams will now consolidate and aggregate because the regulations don't really differentiate between the various sectors. So you will lose some form of specialization, and therefore, when the projects come to us, there needs to be a certain form of maturity or a certain form of de-risking for that project to access bank capital, which typically is the cheapest. Right? How can we then be constructive in that conversation? Again, that's for us at Standard Chartered, that's where the partnership comes into play. If we can't be a part of that capital, we have partners that can play. We can put some of that capital aside, which might be expensive, but that's where if we are able to distribute the capital for providers of liquidity who we know can able to price it, that allows us to again have conversation of, look, what are you looking for? Is it bank debt? Is it mezz financing? At the end of the day, I think, as Andrew pointed out, there is a cost to capital, and we want to be as constructive as possible to be able to price that capital so projects are able to then proceed. I think I want to kind of flip this across and say, look, for us, we are ready. I'm sitting here waiting for the next project. Andrew, tell me, when is the next project coming online?
Yeah, look, that's a very difficult question. I'm going to answer a slightly different one, which is actually relationships are important as well. And I like to think we've all learned our lesson that when the drug of ECA financing was turned off, a decade ago, and they stopped financing oil and gas assets, a lot of people were caught out because they hadn't sort of started working up alternative sources of financing. And that's why we hear the common chorus that it's very difficult to raise financing for FPSOs. We are perhaps at the tipping point for banks, and maybe that will slow down because of the big orange ban. But it will happen, right? Basel, etc., everything, it will happen. So now is the right time to be investing in potential new pockets of capital. Whether that's you've got a mature asset and you want to do a small Nordic bond to maximize the tail of that contract, whether you've got a small FSO and you want to try Chinese leasing, whether there's some other idea that you've come up with. Put the capital to work now. Let them familiarize themselves with what is a difficult industry to penetrate, the FPSO or the offshore space. Let them get up to speed, and then you'll have a much easier time when you want to raise financing for a $2 or $3 billion vessel in that, their credit's already warmed up, their front offices are already warmed up, they know how you act, they've got the relationship with you. That's how we will continue to finance this for the next generation of FPSOs.
Yeah, and you mentioned Chinese leasing there. That's one thing we haven't covered yet. It's obviously got some challenges in terms of the structure for an asset like an FPSO, but on the other hand, there seems to be very strong appetite from the Chinese leasing providers to try and do FPSO deals. I think it's seen as a very efficient way of deploying a very large amount of capital. Rather than trying to do, a dozen shipping deals, you could deploy the same amount on one FPSO. So the appetite is there. Do you think it's a market that will take off, and do you think we'll see some deals happening in that space?
I think the Gimme deal that was just done is a good showcase. Clearly a very strong off-taker with BP. A consortium of financiers coming together to provide that capital. It is challenging, and I think we all need to make the investments now. So firstly, the global geopolitical challenges. We all need to get our heads around, Chinese ownership of the vessels or flagging, or whether they're building Chinese yards. I think, that operational side needs to be figured out and priced correctly. Obviously, the underlying capital is very attractively priced, but if you're jeopardizing your operations or your asset at some point down the road, that equation doesn't quite work out. But yes, I do think that for the right asset, for the right fields, for the right off-taker, there is a market for it. I'm not sure they're fully up to speed on the industry yet. There's a lot of appetite, as you say, but we are not a traditional branch of shipping. Our vessels don't have intrinsic value. There's no, if you take ownership of it, are you really going to be able to operate that FPSO and still generate the cash flow that you projected in your model when you signed on? I think those questions need to be answered, but hopefully we'll figure it out.
Anybody else, any views on that?
No,
Yeah, no, I think it's an interesting one also because there's a lot of uncertainty around Chinese leasing when it comes to traditional shipping, right? Because, a lot of the traditional ships, they actually call on US ports. We don't know how that will sort of play out in terms of regulations going forward. It could potentially put some pressure on Chinese leasing when it comes to them being competitive for traditional shipping.
That could potentially be helpful for the FPSO space, right? Because the capital needs to go somewhere.
Exactly, that was my point. So it could be that we will see that Chinese leasing will be venturing a little more outside the comfort zone going forward.
Why are we seeing Chinese leasing be the sort of predominant, why not Japanese leasing or other country leasing houses? Why is it just the surplus of capital in China?
I think it's partly that. It's also partly that the amount of deals you can do from the Chinese lessors is more. That there are less restrictions. There are certain things you need to satisfy and boxes you have to tick to do a lot of the Japanese leasing stuff, whereas the Chinese leasing tends to be a lot more flexible. There's that. There's the amount of capital. There's also the very favourable terms on offer for the shipping space. At least you can get very long tenures. You can get very good pricing. You can get very high leverage compared to standard bank debt. So there's a lot of appealing factors there as well on it.
So I think another way to look at this and flipping on the other side is that there are various pockets of liquidity now that also represents geopolitical risk potentially attached to it, right? In the past, we used to live in a world, a purely capitalist world, where the cheapest pool of liquidity will go to the lowest form of risk, and hopefully everything will align today. I don't think that's true today, given what we're all experiencing with trade tariffs, with China +1, with the Middle East playing out on the conflict. So whilst we as banks kind of evaluate our clients on what the risk represents, I think a lot of our clients are also asking, look, who do we want to partner with, and what kind of political risk do these providers of liquidity provide? Right? So I think Chinese leasing clearly identifies one where a lot of them are state-owned. They have been given a very strong mandate to invest in shipping, and clearly a lot of that liquidity might not flow into shipping, hence why it's kind of flowing into the offshore infrastructure space as well. There could be potentially for Japanese liquidity as well, we never know. I think, again, we've always been educated that, look, Andrew puts it in the form of relationship. I look at it more of pools of liquidities within the risk mandate we are allowed to operate. For us at Standard Chartered, we are focus in the core regions that we are strong in, Asia, Africa, and Middle East. While we are a global bank, that's where we're going to lean towards to. Different banks will have different home grounds they want to, and I think with Chinese liquidity, that represents a pool of liquidity from the Far East. Yeah.
Yep. We're running a bit short on time, I think. We're going to get the nod in a second. There was a lot of ground we didn't cover. We wanted to cover different contracting structures and BOT. We wanted to cover small deals versus big deals, but Kevin will have to invite us back next year for that. One thing we did do is I asked the panel if they had any anecdotes from recent experience that kind of sum up where we are in terms of FPSO financing. Did anyone have one that they wanted to volunteer?
Just on one of our recent bond issuances, we did an Asia roadshow. We went to Singapore here and Hong Kong, and a lot of people, they just weren't familiar with the Nordic bond structure, and either they passed or they submitted very small allocations. And then obviously the next week we came through the region and the tone was totally different. And the tone was, why didn't you allocate us more of your bond?
Yeah, so I think I want to share an experience with a client in the FPSO financing. I think when we were working with them, they were really concerned that we will not be able to raise the amount of debt that they require to finance the project. And in the end, actually, you know, there was a oversubscription of the financing that they wanted to raise. So I think the message I want to put across to you is, I think the appetite for oil and gas financing, whether it's FPSO or OSVs, is in a state of flux. So I think for clients, they should always be prepared, and they should always be talking to multiple sources of capital, and then be prepared when the day comes.
Anyone else?
On FPSOs, I think there's relatively few FPSOs in the Oslo harbor outside Oslo Stock Exchange. So I think I'll pass on that, but I could maybe make a prediction instead, which I think is, at least in the public markets, I think you will see in the coming years some interesting transactions in the offshore space in terms of companies merging that you probably wouldn't think, probably some different asset owners putting their fleets together, probably some investors or owners taking passive or active stakes in various companies, and probably some fun combinations and stories coming out of it. That probably will be in Marine Money magazine at some point. That's my prediction, at least.
You heard it here first. So thanks, gentlemen. I think the message to take away is that there's masses of activity. We should all get out from under the black cloud and accept, as Andrew said, it's a new world out there, but it's a new world with lots of positives in it. I think that just leaves us with going over to Kevin to find out what the scores were for the number of interjections. Who won the award for the most active panelist? Well done, Andrew. All right. Thanks, everyone.